Welcome back to the channel, guys. Today I'm going to give you my Bitcoin analysis for 20 February 2026. Once again, this is a non-biased analysis and this is for educational purposes only. This is not financial advice. So if we go to the charts, we already know, guys, that we are in a bear trend and bear market. Why? Because we are trading below the EMA 200, as you can see on the weekly time frame, which means that we are most likely going to go even lower. And also, if we go back to the daily time frame and zoom out here, we can see that we have a dead cross here of the EMA 50 under the EMA 200, which means also that we are in a bear market. Now, this downtrend started a long time ago. If we count from this dead cross, it looks like it started from 16 November 2025. But obviously, right now we are kind of extended, if you know what I mean, since we already went down 40% almost from the previous high, which means that we might see some bounces here and there before coming and visiting other areas of interest when Bitcoin is on the bear market. So if you want to know how did I get this area of interest from 45k to 55k, I just took this price target from this flag bearish pattern and put it here, and as you can see, the price target that it gave, it's around here. But of course, price targets are only price targets. They don't necessarily guarantee that the price is going to go there. And I also look at the previous highs and lows from the previous time frames, and I decided on these areas. So I have this area from 56k to 57 or 58k, and this one again from 60k to 62k. This one we already visited on the 6th February 2026, but we bounced from it and we had this downtrend short-term move again. So as you can see right now, what's happening is that Bitcoin is bouncing again from this support level from 65k to 66.5k, and we are going to test again this area from 67k to 70k. So on the 4-hour time frame, it shows that we are getting higher lows here, but it also shows that we are getting lower highs here. But if we look at the RSI, we can see that we have higher highs on the RSIs and lower highs on the chart, which is a bearish hidden divergence. So I always take this into consideration when I place my trades. Also, if we go back to the 1-hour time frame, we can see that we had a break of this trend line on the 1-hour time frame, and it looks like it's going to turn into a support for the level to go back and search for other levels. But once again, it's only on the short time frames. Now, if we break this area, we are most likely going to come and try to break this other one from 71k to 74k, which is a very big resistance to break. Now, when it comes to the liquidation heat map, it's also a map that I'm always monitoring. And if you can see here, we have a lot of liquidity that is sitting upward of the price right now. And if we compare it to the liquidity that is sitting on the downside, we can clearly see that the liquidity here is more than this one. And what we know about the price is most of the time it goes and search for this liquidity, so it liquidates people who placed their short position before going downward and continuing its downtrend. So it's everything for me, guys. I try to give you a transparent and unbiased analysis. If you have any question, just let me know in the comments. Take care and see you on the next one.